All right, guys. Hello, guys. How we doing? Hope you are doing well. I welcome you guys to another episode of my educational video, or educational class where I teach basically synthetic indices. So in this video, first and foremost, I hope you are crushing the market, and I hope you are doing amazingly well with your chart analysis. But if you are not yet doing well, uh, the only advice I can give you is just to go back to the drawing board, go back to the chart, and look at what you are not getting right, and try to see how you can fix yourself, learn again. Then trust me, you'll do well. All right. Without any further ado, let's jump into the chart. Okay, in this video or in this class today, we won't be doing much. Just what we'll be doing today is I'll be calling it increasing your speculations on chart, increasing your speculations, areas where you should be looking at your analysis, your market structures, and basically your speculations, where you are anticipating the market to go to reverse, taking TPs, your SL. If you are wrong, yeah, you should jump out immediately. So that was what we'll be looking at. All right. If you are following us for the first time, I'd like you to hit the like button, subscribe to the channel, and put a comment there. We'll really appreciate it. All right, let's jump into the chart and see what we have today. All right, this is synthetic indices, jump indices, and jump 100 to be precise. If you know me too well, you know this is the pair all the straight. So now, all right, let's go to 24 hours, the higher time frame. Okay, let me delete this. All right, basically we could see that this pair has been selling for days. If you add the days, it could be like for weeks and even for a month plus. God, these are days. These are days. These are days. So basically, this could be like if you go to MT5, this could be like a monthly candle. So basically, we have been selling. So we have been selling. So how do we increase our speculation? Increasing your speculations are looking at areas, zones where you expect market to get to, and you should expect a reaction to it. All right. So first and foremost, before you before you analyze, you know how we do it. You go to your higher time frame. You can scale. You can go up to the monthly time frame, the weekly time frame, the daily time frame, 4 hours time frame, 1 hour time frame, and as the case may be, some people even analyze on 2 hours time frame. So it all depends on what individuals are looking at. But in this place, we'll be scaling down to other time frames, like the 4 hours and 1 hour. All right. So here on this chart, market was selling for days and for weeks. So market got to this level and reacted. Okay, market reacted from this zone. Let me mark it right here. Market reacted from this zone. Okay. And we had a very buy up, but we had market buying for hours. If you go to 75, this could be like a buy for 2 days, 2 days buy count. But however, let's look at what market structure is telling us about. Okay, let me delete this. This looking like spaghetti stuff. All right, so one of the basic things I love about this market or this indices is that it respects price action. Some people says, so I've heard some people, I know you were told, or you've heard it somewhere that jump indices are not good to trade, that they can blow your account and all of that. But they can be true. But I tell you, if you know what you're doing, this is one of the best pairs, jump indices. They respect market, they respect market price actions a lot. All right, let's go quickly. So we can see on this chart basic market structure. Now, we have, if you've listened to my first video, I need you to go and watch it if you've not watched it before. Market structure, what the basic market structure is telling us about. So basic market structure is telling us that, for example, in a sell market, we have a lower high, we have a lower low. Of course, we expect this lower high to maintain uh, its high and not to be broken. So we place our sales here, sell limits or whatsoever, then we expect the market to take out the low. Good. So this is and then we'll come here. We expect this new lower high to hold. Then we expect the market to sell all the way down. All the way down. Now, so that is how market is supposed to go. That is how market is supposed to keep selling down. If market if market continues to if market continues to break structures to the downside, we expect it to break further structure to the downside and maintaining sell position. So this is what we call the basic market structure. However, there's what we call um, the advanced market structure in such a way where market fails to break a low, like for instance, this market, for example, market fails to break this low, creates an equal low. Now it signifies that some people might say a trend wants to change. We don't have the full confirmation yet. But in my own experience or in my own trading experience, for a trend to really change the direction for change to the opposite side of the trade of the trend, I expect the market should take out at least minimum two lows to the opposite side. What I mean is that market should take out this one, then market should take out this one. Then I can now say, okay, we are officially what? Bullish, for example. If market take this high, take this lower high, comes here and take it again, then we can say we are bullish. Then, however, we can now wait for market to do what? Come here and look for good liquidities and bounce out the way up. But in this scenario here, let's look at what we have here. So we have market creating lower high, lower low, lower highs, lower low, breaking structures to the downside, lower high. So market broke this and gave us a lower high. Market broke this and gave us what? Market gave us a lower low. So the next thing we saw here is that market came here. This pullback wasn't efficient. I call it an inefficient pullback. If you are a price action lover, you would know that this pullback wasn't efficient enough. That if market is coming back maybe to take orders, it might clear it off. If you pay attention to good liquidities and all. But that's not where we are going to. Now, market came here because we expected market to pull back at least to this area, but he refused. He made use of this support. Then he sold and broke structures again to the downside. So we expect market to take out this high and come to this place. Because why? This pullback wasn't efficient enough, but market didn't do that. It made use of it and gave us a lower low. Pay good attention to this price analysis or this price action here. Now, this is where the trick is. Now we have market giving us an inefficient pullback, break of structure to the downside, lower highs, and break lower low again. Now, coming here, we now have two break of structures to the downside. Of course, which is our recent break of structure, is this lower high here. So if we're expected to sell, we can risk by selling here, but it's risky. Why is it risky? Market can decide that I want to take out all these liquidities and come to this high and do what? And sell. However, if you know how to trade candlestick confirmation very well, you see that we have rejection candles right here, this candle right here, this one right here, then we sold. So we sold all the way down. Market sold and came all the way. We expect this low to be taken out, but market failed to take it out. Instead, it swept it with a wick, and then it came here. Now, this is where the trick is. Now, what is our speculations of this market? We expect our speculations in this market is we expect, let me take this out so that we can see. From the price action we have here, we expect, because this is an efficient pullback, this market was expected to take out this high, but it didn't. It broke to the downside. So market came here and take orders again and failed to create a lower low. So I expect this market to do what? To take out these equal highs, take out this one, and come over to this high over here. So for us to maintain the downtrend, all these ones are all liquidities. So if this market clears out all these plays, then we can be looking at, because there is no good efficient pullback in this zone. So market is expected to take out this high a bit, then continue selling downward. So that was what we saw. We got confirmations. And if you look at what happened here, let me go to 2 hours, you see? Let me mark the line. So we have, so our speculations here is this high right here. Market took it out. Immediately market took it out. What do you see? We saw a bearish candle, a small bullish candle, then market sold. If you go to 2 hours, if you go to 2 hours clearly, you will see a candlestick strategy or a candlestick formation. This candlestick right here. If you know this candlestick right here, this candlestick, you can turn $100 to $1,000 in 4 to 5 hours. This candlestick right here. This candlestick, the name of this candlestick is called the hammer, the hanging man. So it's another entry strategy I just taught you guys. So if you're quick to get things, you should get it very quick. So this is the hanging man. So market sold bearish. The market reversed all the way. I came and tested it and sold again. So this is what we call increasing your speculation. So market was buying to this place. You expected not to do or take buys. I mean sells from here. Whereas even though market gave a reversal candlestick here, this is an inverse pin bar, but market still broke it and went all the way up. So if you're looking at selling and probably you didn't get confirmations on lower time frame, because this sell was very massive. This candlestick that dropped this market down was very massive. So probably you just go to a lower time frame, just mark out this pin bar here that showed at the top. So drop your buy and short position here. You can delete this and put your SS slightly above here. Then you sell all the way down. So this is basically how to increase your speculations in the market. Do your markings correctly. Look out for the highs and the lows, market structure, the basic market structure. If market is trying to create a basic market structure, or if market is trying to create an advanced market structure. So you should know where you should be looking at for entries, and you know where you should be looking out for TPs. For this one right here, if market sells all the way, we expect this low to be taken out. So once this low is taken out, you are expected to get out. If you want to hold, is on your own terrain. If you want to hold, you can go to M5 and look at the weekly time frame. Look at the past data of support and resistance. So, but you can't find them here on derivative chart on derivative trading view. But you can always find them there on MT5. So this is how to increase your speculations in the market. How to get high speculations. So One thing I love about this pair is it respects price action. It respects support and resistance. Where support, where resistance is, the market gets there, you reject it immediately. You reject it immediately. You can see that this is an area of resistance, past resistance. So market got there immediately. It gave us a candlestick pattern. So if you are good with this, my entry was here. My entry was here. My entry was there. It was I entered and got profit all this before giving out this to the trading community where I belong. So I had like two entries. Market sold here, took some partials, then waited because I knew market was going to reverse. Then I placed sell here. So, however, because we are just anticipating and predicting to what market will do. We are not market movers. So, however, let's see what the market is going to do at the end of the day. So we expect this market to sell. In my own opinion, I expect this market to take out this low and sell all the way to. I expect the market to sell, take out this low. It will reverse a bit and sell all the way to 5 or empty 5 to 5. 557 thereabout. Then I'll take out um, my profits. But however, this is our first target here. So that is how to increase speculations in the market. So if you have any question, you can drop it in the comment section, and I'll do well to attend to such questions. And I believe our trading journey will be smooth and we'll always do well. All right, let's go. Have an amazing week ahead. Have an amazing trading journey ahead. Remember, don't forget, Forex is a game of probability. It's a business of probability. It is not a business, it's not a business or it's not a game of certainty. It is always probability. And people that think in probability always win on the long term. This is what I'm trying to say in essence. Do not put your whole money into something you don't fully understand or you think you have full assurance of it. No. Always risk what you can afford to lose. It's always a game of probability. If you have, for example, if you have $50 in your account, per trade, you can risk $10. Instead of risking the whole $50, it is not advisable at all. It is not advisable. How can you risk the whole of your money in a trade that is always fluctuating up and down? So it's not advisable. We just sit and analyze and watch market do its own thing. So I wish you an amazing trading year ahead, 2026. Let's milk the ride. Let's milk the ride. Tune up to this channel and I promise you will get values and values and values and values. Cheers, guys. Let's go. Let's go.